Vikram, thank you for joining me. Your fellow banking leaders here in Davos are, you might say, banding together to fight the government attacks on your industry. And I want to know if you're going to join them.
Erik, I heard the president give his talk. I read the speech after that, and I've actually had an opportunity to talk to a number of people in the industry and outside the industry. And we're aligned with the principles that the president talked about. We believe that's generally the right direction for reform. Now, that shouldn't come as a surprise, given what we've had to do over the last 2 years. We've completely changed our business to focus on clients. We're 20% smaller as a company. We've sold 20 businesses. We're out of shadow banking. We've defined ourselves as a bank to help customers. You know, we sold things like Fibro, which was a proprietary trading business. We're selling some hedge funds. And our risk profile is completely different. We have 12-to-1 leverage ratio. And so we've been moving in that direction, and we plan to keep doing that. Now, we do want to work constructively and collaboratively with the authorities, make sure that we have vibrant capital markets, capital formation, job creation, systemic safety all going together. But you've got to say that the president in a speech reignited the debate, reinvigorated the debate, and there's something about a call to action.
There certainly is a call to action, but as you point out, Citigroup is far ahead of many of its peers in the efforts to shrink its balance sheet and take risk out of the business. So what you've done, as you point out, is broadly similar to the intent of the Volcker Rule. Does that, by the same token, mean that it really doesn't or isn't, provided it's passed, going to have a material effect on your business?
We believe that's the case because, again, one of the first things I did when I came in was I looked at Citi and I said, what is this business all about? Are we serving customers? Are we serving clients? And if the answer was no, I decided, well, that's not really a business we want to be in. And having gone through that process, and you know, we've had a long way to go. We're very happy about where we are as a company. These kind of activities really don't make a big part of what we're doing. As a matter of fact, they're a de minimis part of Citigroup right now.
Are you concerned about the pushback we're seeing from other bank CEOs?
There are lots of people that are involved in writing this regulation or these regulations, not only in the U.S., not only the CEOs, there are central bankers around the world, the G20, and all of that. I have full confidence that we'll come out in the right place for what's right for the system.
Does the government risk in any way stunting the economic recovery by bashing the banks, alienating the bankers, and maybe leading them to a place where they're less inclined to extend credit?
We have to admit that not everything that the bankers did worked in the last so many years, so there is a need for reform. We shouldn't confuse the need for reform necessarily with bashing. And my view on that is that each of us as a bank has a right and the responsibility to keep doing what is necessary to lend money, to be part of capital formation, all of which helps jobs, and that's what we're doing.
Has the president gone a step too far with the rhetoric, the anti-bank rhetoric that we've heard from him?
What I would say to you is that wherever you look around the world, there is a concern about why we are where we are, and also concern about how we should be designing a system for the future that's safe, that's sound, encourages job creation, all of that. And it's hard to design that without the banks being right in the middle of it. And so it's very natural that we're a topic of discussion.
Citigroup has designed its strategy for growth around emerging markets. Participants here in Davos are almost universally bullish on emerging markets and say that that's where capital increasingly is going to flow. Can those markets really handle those kinds of inflows?
Let me start by saying we've been in emerging markets now over 100 years, and we were in these markets way before it was cool to be in the emerging market. So we have a lot of experience, a lot of relationships, and frankly, we like what we're seeing. We're very constructive on the emerging markets. Many of them have indigenous development models, and many of them have come a very long way. There is still a lot of need for infrastructure in many parts of the world. There's still a lot of need for productive capacity in many parts of the world, and the emerging market consumer is still young, and they are going to be consuming more going forward. When you put all of that together, it's no wonder that people are looking to the emerging markets to put investment to work, because that's where the returns are likely to be robust on a shorter term basis.
Do we risk, though, at the same time creating asset bubbles in emerging markets as a result?
Those are always the right questions to ask. And by the way, we created one in the non-developing markets, the developing markets as well recently. But those are all the right questions. Having said that, I have a lot of confidence in the central bankers around the world, and as well as in the capital markets, having gone through what they've gone through, to create a much more orderly growth cycle.
Do you see any bubbles, let's call them, in geographies or asset classes around the world right now?
You know, there is so much caution in terms of investing in the marketplace today. There are still a lot of uncertainties, a lot of volatility in the markets, that people are being quite prudent about how they're putting money to work. But any time you've put a system in place as we have, the central bankers have had to push a lot of money into the economies, you worry about what happens on the other side, because that's the kind of thing that ultimately leads to inflated asset prices and those kind of things. But then I have full confidence that when the economy turns, the central bankers will be equally active going the other way.
We've already seen that begin to happen in China. There is some concern that the Chinese aren't acting fast enough to restrict credit, or at least restrain credit growth and cool their economy. Do you share that view?
China has been a very important part of the world, a very interesting growth story, an important growth story, and it's one of the things that's going to help the world grow as well. And they've actually acted very fast on both sides, both coming into this crisis as well as you say right now, moving out on the other side. Of course, it's not only what happens in China. We are interrelated as a world. It has to be something that's done around the world. And again, as I said before, I do think the central bankers are right on top of this one. They understand what needs to get done.
Prince Al-Walid, your single largest individual shareholder, said recently that, quote, your honeymoon is over and 2010 is the year that you, Vikram Pandit, have to deliver. What do you think he means by that?
What honeymoon? We've come a very long way as a company, as you know. Over the last 2 years, we have changed the company. We're a very different company than what it was before. And as a result of all of that, we have some very strong operating businesses, in Citicorp particularly. We have very strong revenue strengths. Our costs are down by $13 billion a year. Our balance sheet is down by about 20%, selling a lot of the risky loans that we had on our balance sheet. All of those have created a very good foundation for entering 2010. And of course, our goal is profitability now and sustainable profitability. And that's really what we're watching. Now, the long-term picture is clear. On a short-term basis, it's about credit versus our strong operating businesses. And both the Prince, as well as I, and I'm sure others who own Citicorp stock, are watching that balance between job creation and when the economy turns. And we're all looking forward to a very successful company.
What do you need to do this year for him to say 12 months from now that you delivered?
Well, you're going to have to ask him that. Our goals are relatively straightforward, and they are to continue to invest in our very strong operating businesses, and we're doing that. Continue to divest of Citi Holdings, which are those assets that we are trying to reduce, and profitability. Those are the goals that we have as a company. And of course, a lot of that depends for us and everybody else on what happens in the economy and job creation. But ultimately, we've come a very long way as a company. And 2010 is an important year because we can start seeing the operating strength of our underlying businesses at Citi.
What do you think the chances are Citi will be profitable 6 months from now?
You know, what I would say to you is we have very strong operating businesses as a company, revenue strength, cost structure is down, under control, as well as we've reduced our risky assets. So the long-term picture is very clear. On a shorter-term basis, it's credit costs on one side in our Citi Holdings portfolio versus the earnings power on this side, and that to some extent is going to depend on job creation.
Vikram, how would you rate your own performance as CEO?
I've got to tell you, this has been quite an experience for me. Quite an experience for everybody at Citi. And it really is not about me, it's about all the people at Citi that really came together to make something special happen. You cannot imagine the amount of hard work that has gotten done over the last couple of years and the dedication and commitment of our people. So I say this not only for myself, but I say it for everybody at Citi. I'm really proud about what they've done. They're the ones that have gotten us to this place. We entered 2010 in a fundamentally different place than we were 2 years ago, with a very, very strong foundation for growth for the future, strong financial strength as well, and an iconic brand that has served American companies around the world for decades. We are the one company that brings the world to our clients and our clients to the world.
That said, they look to you for leadership. Is there anything you think you need to do differently going forward relative to what you've done up until now as a leader?
I think all of us really are completely focused on the economy and profitability. My job, and the job of everybody working at Citi, is to secure the future of this company, whatever the pain is on a short-term basis. You know we've taken plenty of pain, but we're intently focused on execution. That's the job this year.
Do you think, in retrospect, you repaid TARP too early?
We repaid TARP because it was the right time to repay TARP. And we've thought about it a lot, and obviously we work very closely with regulators and the government on this particular issue. And when you look at the performance of the company from the beginning of 2009 to the end of 2009, I don't think we or others would have thought we could do that. And so it's been quite an accomplishment on the part of all people at Citi to be able to get to the point where we could have done that.
The government for the moment remains a significant investor in Citigroup. How would you be running the bank differently if the government weren't an investor?
Again, what I have to tell you is that we have the same objectives. The government and us, they made an investment in us, and as a matter of fact, the entire TARP program was a result of creating stability, or wanting to create stability in the financial system. So they want nothing else than for us to be profitable, strong, a vibrant bank going forward, and we've been working exactly in that direction, and we're happy that we have the same goals.
One last question. Where, in your mind, are we in the credit cycle?
I think that's a very important question, a difficult one because there is so much uncertainty and volatility still. We believe there are three parts to the credit cycle. The first part relates to capital markets credits. Markets trade down, CDSs widen out. We believe that we may be largely behind, or that cycle may be largely behind us at this point. The second part is the consumer cycle, which is what we're going through right now. The third part is the commercial real estate cycle. The commercial real estate cycle is just starting to happen. That's ahead of us. The consumer cycle is what we're working through. I've got to tell you, especially in the international markets, we like what we're seeing in that part of the cycle, and we're actually quite heartened by some of the trends in the consumer cycle in the U.S. as well. So we're going to have to watch it, but we're just now in the process of peaking, or close to peaking, in the consumer cycle.
Is that to say the prospects for your bank and perhaps others in the industry might be a bit better going forward than you thought 6 months ago?
It completely comes down to job creation, and as I said, we have the consumer credit cycle, and then there's also the commercial credit cycle. Different banks are exposed different ways. For those like ours who have much more consumer-oriented assets, as I said, we're heartened by what we're saying. There may be other banks that have much larger commercial real estate portfolio. They've got a lot of work to do.
Vikram, thank you for joining me. I know you've got to go. A pleasure speaking with you.
Eric, thank you very much for this opportunity. I appreciate it.
Great.